A sub 6% growth definitely would have a big impact on sentiments and investor confidence. So definitely this 5.3% growth number does add to the argument for further monetary easing in the June mid-quarter policy review. However, there are a number of data points which are yet to come out between today and the 18th, which include the IIP data. That's going to give us a trend for April, as well as the inflation data for the month of May. Now, what we've observed in the inflation data for the month of April is that there has been a pickup in headline inflation, but core inflation remained fairly flat as compared to the previous month. Now, to the extent that it's more of a supply side background to this pickup in headline inflation, the RBI may not be as concerned. However, there remains concern that there may be some generalization of inflationary pressures going forward, particularly the impact of the rupee depreciation, which would be felt through imports. Also, the petrol price hike has happened. That would reduce the level of suppressed inflation, and that's not something that we expect the RBI to be overly worried about. In fact, they've been mentioning in the last few policies that the element of suppressed inflation needs to be brought down. I think there are a number of policy related issues that have been hindering or hampering investor sentiment over the past year, and an easing in the overall regulatory concerns, particularly related to the mining sector, would be something that would help ease some of the concerns and the raw material constraints which the Indian economy has been facing, with respect to coal, etc. Overall, if the power scenario improves, power itself has been a constraining factor for manufacturing growth over the past year. As far as the rupee depreciation is concerned, I mean, definitely given the fact that India has fairly inelastic imports of items such as crude oil, India imports of the vast majority of its crude oil requirement. Also, the imports of coal are likely to only increase going forward with more generation capacity coming up based on imported coal. So there again, despite the rupee depreciation, we are not going to see an expected response. Rather, coal imports are only going to go up, irrespective of the fact that the rupee has depreciated. So, given this background, in the near term, there are obviously concerns regarding the trade deficit. In the medium term, there is an opportunity for a structural adjustment with exports possibly being able to increase as far as the market share is concerned, given the fact that the Indian rupee has depreciated far more than the East Asian peer set. We could see some improvement in exports going forward.